Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update. And this is your end of the day video for Wednesday, the 2nd of January, 2019. And we're just getting on to 4 p.m. Central Standard Time. Apple just came out with some forward guidance, if you will, knocked the stock market back off its perch. It was doing much better just before they had released that, and back down it goes. The gold market still continuing on a strong basis, the same in the silver. Copper's got problems because if you're watching China's PMI Purchasing Manager Index, it's now in a contraction phase. It's looking more and more like their economy is in a first stage of a recession, if you will. Big problems going on, and that is not a benefactor to the copper market. And copper often leads how economies are doing, so you've got to be a big concern. The dollar up today as we've had wild currency trade while I was out on vacation. If you were watching Bloomberg this morning, I was on when the crude was at different price levels than this, and I know everybody was super bearish, and they asked me the question, am I as bearish as they are? And I said, no, I'm not. So the cure for lower prices is lower prices, and you've gone down now from 70 basically down to $44, and you'll get to this point down here where some of the small producers in the U.S. do what's called a shut-in. They're not that profitable at some of these numbers, so you get a bit of a reduction. Plus, the Saudis, you're going to see the first moves where they have stopped shipments to the U.S. They said they were going to do that, and I know that they're starting to do it now. Grain market, a little bit of a rally. So when we look at the gold market, there's no getting away from it that if you look back at the August time frame, that's where the low was. You've rallied about $100 an ounce, 8-9% overall from that low, and you're up on this perch, and you had a great rally during Christmas because the stock market was doing so poor and people were doing what? Buying the gold market, safe assets like the yen, the bonds. You know, are you watching the 10-year note? 266 today in the market. I was talking to Rick Santelli of CNBC about it, and you know, you got people scared. Look at how this gold market rallied with that part of it today. Now, the reason you just saw it slip back from $5 up to only $2.80 isn't that was the trade. Remember, they settled gold at 12:30 p.m. Central Time, 1:30 Eastern Time, and so the settlement price, you revert back to that. So the last trade of the day was about $2.20 higher than where you're at right now. When you look at the swing lines, which is a study that I wrote, an indicator, it tells me, and if you took my charting course, you learn this pretty fast, what is the trend and what is the risk associated with the trend? And what do I mean by that? A trend and an uptrend is defined as a pattern of higher lows, which you've got, and higher highs. To break the pattern, the risk would be to get back under 1269.10. When you take a look at where the market's at in terms of support and resistance, one of the things I look at always is to see where the market's at in relation to what I term the line in the sand. It's a key moving average. The one I use is the 18-day. Some traders use a 20, some use a 21. There is no right answer. It's in that zone. I've done enough research over all my years where I even bought services that would go back and epitomize what's the best moving average to use for that given market. I didn't find it worth the expense or the time and the effort. So I use the 18, and when the market's over that, I say that I'm looking for buy signals, and it acts as a filter on other parts of things that I'm doing. But where would the resistance be? One of the numbers I use, and there are several, are Bollinger Bands. And this black line is the top band. This dashed black one is the bottom band. They do not run parallel to each other. The formula is this. It's an algorithm designed to keep the market trading within it 95% of the time. And as you can see, you can bump up, you pull back, you bump up, you pull back, you're staying within it. It's a resistance point. One of the things I use with it is momentum to see is the trend, number one, holding and is it getting stronger. And what this market has is called an embedded reading. Now, if you think about relative strength and other indicators, they typically go from an oversold area to an overbought area, back and forth like that. But what do you do when it locks into place? Well, I call that embedding. And when I get an embedded slow stochastic with a market that's got a pattern of higher lows, higher highs, and over that 18-day average, it keeps you very much in the bull pattern until one of these things are broke. If you lose the embedded reading, which is the red line settling under 80, right now it's at 89.39, then I look for price in the 18-day average to make a run at each other. Doesn't mean they have to hit each other, but they often will make the run, and more times than not, they'll come together. When I look at the gold ETF, GLD, the embedded reading, higher lows, higher highs, the bias in place. If I come to the gold miners, not the same pattern. This is weaker than the actual bullion. You have a pattern of a lower low and a higher high. But what the market has done is it's kept the upside bias. It got itself, it had the embedded reading all the way back here. When it lost it, price often makes a run to the 18-day average. As I said, it doesn't have to hit it every time. You lost it, look at how close you got. Then you started your bouncing, if you will, and you're still in that bouncing. Could it come back and hit that number? Yes, it very well could. But even if it goes up first, it doesn't have a trend to the upside and it doesn't have one to the downside. Another thing I told you on, at least for the base metals, was in order to get a real bull market in gold going, you needed to get this gold-silver ratio reversing itself, not staying as strong as it was. And that's pretty well what's gone on. You peaked out here against the 85.75 level, and you've fallen about 4 points. In the process, silver based out and made a run to the upside. It stayed a number of days, as we can count here, over the Bollinger Band, 2 days over the band. This day was over the band, that's 3 days. 4 days over the band, and right now it looks like 1564.90. It's the 5th day. The way that I do the math, the odds of it staying over that number tomorrow are near zero. That does not mean one goes short. It's a high probability it's going to move to the right-hand side. The fact that you have the embedded reading overrides everything, my friends. It's putting the pieces together. But if one's looking to enter new positions, what this piece of work says is, look to get to the other side of the band. That's all. In the copper market, the market got to the 18-day average, and it's been a bit of a problem for the market since mid-December. If you'll recall, you got to the upper Bollinger Band, you slipped back and fought against that 18 and 100-day average for a while. Then you resumed the downtrend, and 3 days ago, you had this big pop-up right here. And that was, of course, Friday, and the market gets up to that 18-day average, that line in the sand, slips back, and as you can see where you're at right now. So I'll keep repeating what I've said. When a market gets underneath that 18-day average, it's not atypical for it to run, make a fight at that number, or get above the number, and it's on the fallback, fight against that number. Think of it as a line in the sand, and often, not every time, it's like a starting point to do something. Now, the platinum's an interesting market. On a seasonal basis, it often works up at this time of the year. Today, you did some damage on the chart because you just sank low enough to take out a prior low. You're pretty much caught between the lower band, and the question is on follow-through, will the upper band around that 810.50 area offer the resistance? At this point, the bias is up because you're over the 18-day average. Momentum is up, and what should not happen if this market's not going to trap those playing the seasonals is today's low should not be taken out on Thursday or Friday. If it is, yes, I'll say that the odds favor it going to the lower Bollinger Band. Why not? That's the low. It's normally not that close, but it would destroy the, if you will, the momentum that the market gained with the reversal day today. The strongest of the metals has been the palladium. Maybe it's because of questions we're having with South African production of it. Maybe it's our continued problems with Russia and the U.S. Don't know. But the big suppliers have been questionable for us. And take a look how this market is held. This 18-day average of closes, it finds great problems in getting down to a lower Bollinger Band. Not as much problem in getting to the upside. So it has a definitive upside bias, but it still has a pattern of lower highs and a lower low. With today's action, you actually have a higher low and lower high. So you're narrowing in like that, but you're also overbought. Gold's still looking the best of the group. If I weren't around and you went down to that Bollinger Band, you know what I'd be saying. A market that's oversold hits the Bollinger Band, often bounces away from it. And take a look what happened, even with today. This market's waiting to see what the next development is. If you read over the weekend your newspapers, there's a big argument. Is the dollar going to be bullish or bearish for 2019? A lot of traders are waiting to see just what that is. So you put it all together, you can see from what I'm saying, your last settlement price in the stock indices is up. But you know, when I began this, you were down in the market about 120 points in the Dow, and that's because the settlement is at 3:15, but the trade goes to 4 p.m. I write about this and many more other things that probably can help you with your trading day, getting it going, understanding like what reports are coming out tomorrow, what's the estimates for them, what's my take on ideas in the market. If you'd like a free trial to my market research, great way to start your year out. Give us a call. The word is free. I'll give you a free trial to it. You can also go to our website, sign up for it. You can click right up here. It's good to be back. Happy New Year to all of you, and I will see you tomorrow.